Nigeria's external reserves have climbed to $40.11 billion as of July 2025. The Central Bank Governor Yemi Cardoso disclosed this during the Monetary Policy Committee meeting held on Tuesday. Cardoso noted that the $40.11 billion reserve level represents approximately 9.5 months of import cover, signaling a significant boost to Nigeria's foreign currency buffer. Cardoso adds that this is the highest level recorded since November of 2024, when it hit $40.2 billion, making this a significant rebound in Nigeria's foreign currency buffers amid ongoing efforts to stabilize the exchange rate and rebuild investor confidence. He attributes the current rise to increased earnings and the non-oil exports and reduced imports.
Believe me, the numbers are showing us it is beginning to happen. Okay, and I believe that if we continue in that trajectory, we will have absolutely no cause to worry about the issue of uncertainties and all that, because we are able to create, with all this, we are able to create better buffers, which is perhaps the reason why we are happy to announce the 40 billion in excess of reserves, which we have hit as of today.
Well, to help us unpack the outcome of the Central Bank of Nigeria's latest Monetary Policy Committee meeting, where the benchmark interest rate was held steady at 27.5% for the third consecutive time, is Professor Bongo Adi, a professor of economics at the Lagos Business School. Thank you so much for joining us on the news tonight.
Thank you. Thank you for having me.
Yeah. So, I mean, I believe you followed the outcome of the MPC briefing today, and as highlighted, the rates have been steady for the third consecutive time. The CBN governor attributed this to signs of economic recovery, but in your own opinion, what did you make of this decision?
Well, I think I do agree with him that we are out of the woods when it comes to the macroeconomic situation, which was very bad last year. And some of us actually were somehow against the central bank's monetary tightening policy. But, it's also important to know that there are some supply constraints that have somehow ameliorated, contributing to the positive outcome that we've seen. So, yeah, it is possible to claim that it is due to monetary policy alone, but every watcher of the economy will tell you that it's actually not entirely due to the monetary policy stance. There are some structural constraints that seem to have reduced significantly this year that has at least impacted positively on food inflation. So we've seen inflation beginning to dive down, and I think that is what is giving the central bank the impetus to continue to tighten rates. And of course, he's also claiming the foreign reserve that is nudging upwards in positive territories. Of course, everybody will like that because it gives us that import, comfort. That is also due to the tight monetary policy, which makes our government assets more attractive to so-called portfolio investors. So yeah, they would like to be in that situation where they are able to really wage a war against the currency volatility, and everybody likes that. So that stability needs to be maintained. I think that is part of the reason why they have to maintain the rates. And of course, when we look at inflation, we are not yet at the 15% target, which is they are focused on. We're still well ahead of that. 22% is still significantly high. So I would suggests that they do not, loosen up at this point, since gradually we are coming out of the woods when it comes to inflation. And then real interest rates as well continues to be negative, but we're seeing that it's also continued to appreciate, where maybe in the next few months we begin to see maybe neutral or maybe positive trend when it comes to real interest rates, even though it's still negative. So when you consider all the macroeconomic indicators or variables, the point in the direction that the central bank has no other option than to hold the rates where they are. Some of us predicted that, even before the meeting. So looking at inflation, real interest rate, foreign exchange, and of course the exchange rate, we knew that they would have no choice than to hold the rates the way they have done.
Okay, Professor Adi, I mean, 27.5% is still painfully high by some standards and measure for businesses and households. Some say, it is ridiculously high at that percentage point. So at what point do we begin to see the loosening you talk about than this retainment that we have seen for the third consecutive time?
Yeah, so you see, the central bank is actually between the devil and the deep blue sea. So it's really trying to juggle, very contrasting tendencies in the economy. Yes, keeping the rates high has negative implications for credit to the private sector, for households, of course, real income growth. But at the same time, loosening it will somehow put speculative pressure on the naira, which will worsen the exchange rate situation, which will again negatively impact on real incomes and the fortunes of corporates, not least the small and medium enterprises. So so it's actually it's caught between two devils. So they have to choose the lesser one. So that's what I see happening there. But so long as we continue to wage a successful war against inflation, as long as inflation goes down, things will continue to improve for the masses. I know that a lot of people are not happy hearing that the economy is growing, even though there is preponderance of poverty and hardship all over the place. But of course, economy can grow, but we still have to look at inequality, which is a big issue in Nigeria today. But regardless, the economy has experienced downturn for a very long period. And then before we can come out for all the sectors and all the segments of the economy to begin to experience this positive turn of events, it will take some time before it will trickle down to everybody. But we believe that if we continue to maintain positive growth, eventually it will begin to trickle down gradually.
Okay, let's very quickly talk about some of the other things he touched on. He did say that the naira is regaining confidence, or that Nigerians actually regaining confidence in the naira. I wonder if you agree. And then on bank recapitalization, he says 8 banks have so far met their recapitalization targets. Is this a win for the banking sector and the Nigerian economy in general?
Well, it depends on how you look at it. So we have to look at the implication of banks' sound banking system on the credit ratings of a nation. I think that is as far as the benefit of that goes. When you have strong banks, banks that are well capitalized, then it means that your financial market can be assessed to be deep enough to fund large capital expenditure. But then, from experience, we are unable, or we are hard pressed to link, bank capital to real sector funding. We haven't been able to establish that link because most banks do not even lend to SMEs. So if you look at credit to the private sector over time, it hasn't really grown significantly. So, so the contribution of the banking sector to economic growth in Nigeria remains significantly muted, especially when you're looking at the credit that they make available to the private sector. So mostly the banks deal with government, and then you see public sector crowding out, investment in the private sector. So that's been the reality there, So, but I think that the central bank needs to focus on its primary mandate, which is macroeconomic stability. Unlike in the previous regime, when we saw the central bank, spreading itself too thin, fighting many battles in different places. That didn't augur well for the economy. But if we really want to, make things work, both the fiscal policy and the monetary policy need to work, hand in hand. So monetary policy should not be used to pursue fiscal objectives. So I think many sectors of the economy require fiscal incentives to boost productivity, to boost growth. And that is something I think the government will need to do. So we should actually try to lessen the burden on the central bank. The central bank cannot do everything, so that we don't really worsen the economy the way it was before the current regime came into place to begin to clean out the audience table.
Great submission. Professor Bongo Adi, Professor of Economics at the Lagos Business School, thank you for your time on Newsnight.